Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together. It's generally related to three different topics: wealth building, commodities, and/or financial topics. So let's dive in, take a look, see what's going on. If you want to follow me at _finance, and if you want to join our community, finding-value.com, where I dive deeper into all of these topics and subjects, looking for potential investment opportunities, sharing those opportunities with everyone in the community, answering your guys' questions on the weekends, and giving you guys midweek updates during the middle of the week. We do have a special still going on. Special is the coupon code if you would like to join. Global market investor U.S. consumer sentiment is lower than in the great financial crisis. Consumer sentiment fell to 50.8, the second lowest level in history. The sentiment is lower than during every U.S. recession over the last 50 years. This is absolutely mind-blowing. This is a crisis. And this is University of Michigan Consumer Sentiment Index. The index value, we've got current level, which is 50.8, which is lower than basically any time in history going back to 1976 or 7 or wherever this starts. So we are very, very low. We had this, it looks like, in 2022 as well. So consumer sentiment is low, and this is often occurs, these low sentiment values around these recessions. Kevin Bambro says the majority of people have missed out of the flight to safety in gold. They will begin to hoard silver in hordes. This always happens. First gold, then silver. And silver goes up by more multiples. Let history be our guide. So he is thinking that gold's already taken off and the next one to go is silver. And I agree with him. I totally agree. I think silver is the opportunity here. Luke Roman says, some saying China did not sell United States treasuries this week. It says no view. Okay, so 10-year U.S. Treasury yields rose 60 basis points off Sunday night's lows this week, and China hasn't even begun selling yet. How is that supposed to make anyone feel better about the deepest, most liquid market in the world? So if they do start selling, well, how bad is it going to get? That's the question. I went through some uranium charts, just threw up a couple of uranium charts here. This is URA divided by UX1, just because we have history on it. And this is still incredibly low. We haven't come up and broken out of this stage 1 base for URA, the ETF, divided by uranium, the current spot price. This is URA, and this is, again, very similar to Stan Weinstein's book of this big double bottom. So here's your double bottom, perhaps, the breakout, and then the AB, and we've come up and we've come back, and we're still above support. So we're still in a bull market, in my opinion. And this is URNJ divided by URNM. We are very low in this ratio, the lowest it's been since URNJ was created, which means it could be a good opportunity. The juniors are definitely the cheapest of the bunch, and I was just looking at this, noting how cheap it was in relationship to history here. And I know there's not a ton of history here, but URNJ is a little bit newer ETF. But I do think that URNJ is going to be one that could really shine in the future of how cheap it is. It might take some time, not stating it will be immediate. But here's GDX versus gold, SILJ versus silver, GDX versus SILJ, SILJ versus GDX. I was just looking at some ratios, trying to gain some information on what's cheap compared to history. We had a big downtrend of GDX versus gold. That downtrend broke in 2016, big upward move. We've been chopping sideways since 2016. Even now, we are incredibly cheap. GDX, the ETF, incredibly cheap to gold. Hasn't really made its big move yet. And I do think it's coming. Usually you get a downward move, you get a basing, and then you get an up move. I do think it's coming. We've got GDX versus SILJ. I drew it on the closing prices. They're kind of tight here, and I hit this one to include it as a third hit. So fourth hit. 1, 2, 3, 4, 5, maybe 5 hits. This could be a false breakout where we reverse and head lower. You can also see this if you reverse it and draw it at the tips of these guys here, which I did as well. SILJ versus silver, this looks like a double bottom, and we could potentially be breaking this downtrend line very soon, where it looks very, very good. And then we've got SILJ versus GDX. We can get the 3-hump consolidation maybe going on here. 1, 2, 3. Maybe we could put in another one in the corner here. But we're very cheap. SILJ is very cheap to GDX. In fact, it's the cheapest it's ever been. And you can see that, obviously, if you rotate it. It's the most expensive it's ever been against SILJ. And someone was asking GDX versus SILJ. Yeah, we could do that real quick. Why not? Let's do this. So then the other one was GDXJ divided by SILJ. Back out, and right now, SILJ is very cheap to GDXJ. So you got kind of a deal there, and this is the expensive area. This is where SILJ is expensive and GDXJ is cheap. But right now, this would be good to be buying SILJ up at these areas here, SILJ, as this comes and potentially breaks on lower. So SILJ is incredibly cheap against GDXJ. Unusual whales, it's posted Fed Chair Jerome Powell. While uncertainty remains elevated, it is now becoming clear that tariff increases will be significantly larger than expected, and the same is likely to be true of the economic effects, which will include higher inflation and slower growth. And that's jet fuel for gold. We call that stagflation. Good old stagflation. Joseph Brown says dollar-denominated debt is one heck of a drug. So Santiago Capital says, before everyone gets too excited about the dollar losing 5% in 12 days, just remember the same thing happened over 12 days starting on February 20th, 2020, which was right before the C-19 crisis. So maybe something like that is coming for the crisis. Maybe a crisis is coming in the future here. Difficult to say. QE Infinity says, so I've read several articles on this. The consensus is 70 to 80% of Walmart merchandise comes from China. How do they fix this in 90 days? Consumers aren't going to pay 100% plus more for products post-tariff. If you're an executive at Walmart, you're probably freaking out right now. So yes, a significant portion of Walmart's inventory is sourced from China. Estimates suggest that 70 to 80% of Walmart's merchandise comes from Chinese suppliers. This reliance on China is a major part of Walmart's global supply chain. Well, I mean, this is kind of weird, and I don't know if we can do what we are trying to do so quickly. A lot of stuff that we buy is from China. I mean, just look at a bunch of stuff on the tags that you have on, or what's been stamped on products. Most of it is either made in China. I think I've got shirts that say like made in Cambodia or made in Taiwan or something like that, whatever it is. Most everything that I see is not made in the United States. And even the stuff that is made in the United States, there's a lot of components that we get from somewhere else. So I don't see how this works that great. And so even the things that are stamped in USA could be 30, 40, 50, 60, 70, 80% made in a different country. So we're going to literally tax everything. I don't see this stuff coming back anytime soon. I highly doubt that we're going to start to see people starting to sew Nike shoes here. I just don't see it. I don't know, with the majority of it. There's certain things that we need to bring back. I don't know why we don't just bring those things back that we need. If we need shipbuilding, if we need certain items, then bring it back. But I don't see the low labor. You know, the things that moved out for a reason because of low labor. I get it, but I don't know how we're going to get that stuff back and have it be affordable. Platinum news alert from Bob Coleman. He says over 40% of the platinum, there was 92,957 net ounces, was delivered out of the COMEX eligible category. Eligible category was 230,080 ounces and is now down to 137,122 ounces. I've been warning the metals are about to leave. Maybe this is going to cause a problem. I mean, 137,122 ounces at $1,000 an ounce. That's only 137,000 bucks. I mean, that is literally nothing. Think about that. $137,122, roughly speaking. That's what they've got in inventory. It's huge. Zero hedge. Gold could plausibly trade near $4,500 an ounce by the end of 2025, says Goldman. So as the price goes up or as the price goes down, they just changed their estimates, guys. So if this was going down, they changed their oil price estimates. You know, since that's been going down, it'll be $50 or $60 for the year or two. As gold goes up, we'll just change it on up. We'll move it up to $4,500 by the end of 2025. It's pretty bullish, though. I mean, that is a pretty big move from where we are today. But they just change these things. I don't really use these estimates. They're not really worth anything to me. I'm just talking about it because they're coming out. It's news. You know, most all of this stuff here, guys, I don't really use it for anything. Like, okay, platinum's low. I already know. I'm already a bull on platinum, so that doesn't really change my mind. Tariffs are going to be crappy. It could cause a recession, but you know, a lot of it comes from China. Yeah, I already know that. It's like no duh. Dollar denominated debt and this, whatever, not a big deal. I'm a long-term investor anyway. The ratios at least tell you what's expensive and what's cheap real time. So that it makes sense. But most of the news, it's just news, people and opinions. Seems pretty tremendous to me. It says, for the love of God, we need to stop the insider trading in the Trump administration. I'm happy we're walking back the tariffs, but this is turning into a full-blown kleptocracy. Millions of dollars of Apple call positions were opened right up until the electronics exemption. Someone needs to go to jail. Insider trading needs to be cut. And releasing these coins and doing these pump and dumps, that all needs to end. Maybe we should not. Maybe people in government who go into government shouldn't be able to trade doing options or anything in the stock market. And if they're found out that they are leaking information before information comes out, that maybe we should throw them in jail. That it's insider trading. And if they don't understand that, well, then they got to go to jail either way. I mean, come on, you got to be able to understand this stuff. We've now gone from no exemptions on tariffs to refunds on tariffs going back to April 5th to exemptions not being permanent. The result, markets are incredibly confused ahead of the futures open. Yeah, I don't know what's going on here. I don't know how much these are going to be. I don't know if they're going to stick. I don't really know. And I don't think there's any way to know. I don't know if this is just one big clown show going on. This isn't how you run things. I mean, the size of the tariffs, how big they are, that's a pretty big deal. And I feel like no one's taking it serious. And then some people say, well, that's the art of the deal. It's like, I don't think so, guys. I think this is all just this is out of control. It's ridiculous, is what it is. It's freaking ridiculous. Eugene says it's important to know how much and how often stock markets decline. It helps with expectations. So usually the stock market declines about 5+% decline twice a year, 10% plus decline once every 1.5 years. A 15+% decline is once every 3 years, and a 20% plus decline is once every 6 years. Source is Capital Group, and that's from 1954 to 2024. And if you're in commodities, I mean, 5% declines can happen. You'll see this happen each month. You'll see 5% declines happen regularly in a month. You'll see 10% declines happen regularly. And same with the up days. The up days are really big too. It's just a lot more volatile. Warren Buffett says the investor of today does not profit from yesterday's growth. And that's, I see a lot of people trying to sift through a bunch of different companies by using metrics. I think metrics have some merit, but I don't think it is everything. It's kind of like a batting average. You can look backwards, and I'll just say this. Usually when you play baseball, people get hot, and then they get a cold streak, and then they get hot again, and then they get a cold streak. So those that are batting the best, if you were to look back the past couple of months, those that were batting the best generally cannot keep up at that pace. The majority of them. They have a hot streak, and then that hot streak ends. Those who are consistent generally can do very well. So if you see consistency year over year over year over year over year, for many, many years, then that does prove something. But again, the thing I don't like is you kind of have to know the products and if the product is gaining market share or losing market share. There are many times in history where products can gain a lot of market share very quickly and then lose it very quickly some years later. Sony Walkmans. Remember all the CD players that people had? I mean, that grew rapidly and then all of a sudden went off a cliff when other technology came out. So technology cycles pretty quick. Commodities, it doesn't really cycle. It's more of a supply-demand balance. And then financial assets versus hard assets. So financial assets, when you get to a certain point in the market conditions, become overvalued, which they are. It just cycles back and forth. So it matters the cycle that you're looking at and the product cycle life of technology companies and how fast they cycle in, cycle out. Here's Jenny. Jenny says, during a job interview, if the interviewer asks, would you consider leaving if you found a better opportunity elsewhere? How would you respond? Well, I mean, if this is during a job interview, it means that you're not even at that place yet. So my question would be, how would I consider leaving if I haven't even been offered a job at this potential company? I would also state that I don't know what the culture is like, what my boss is necessarily like, and how I'm treated at this company. So how would I know if I'm going to consider leaving the company that I haven't even joined yet? How do I know if this company that I'm at is either good or bad? If I believe that this company is bad and I think that I'm not a good fit for the culture, yes, I would definitely consider leaving for a better opportunity elsewhere. Even if it is a good fit, depending on how good the fit is, I would still consider a better opportunity elsewhere depending on what the opportunity is. There are many things that would make an opportunity better or worse. If I have a bad relationship with my boss, even though the culture is good, I would consider leaving, or maybe I would talk internally with the company to maybe find a different boss that I could work for. It really depends on the fit. I've gone through a ton of interviews, guys. I mean, a ton, and I've conducted a ton of interviews. And when you're younger, you just want to get the job. So what younger people generally ask is, what should I say in order to get the job? As you get older and as you accumulate wealth and the job becomes less meaningful to you, you're going to be a lot more aggressive. So you're going to be asking very difficult questions to the interviewer. And you're going to step in the role as an interviewer versus an interviewee. So when I come in there, I would ask a question back to them. So they say, would you consider leaving if you found a better opportunity elsewhere, how would you respond? I'd say, well, what at this company, since I don't currently work here, tell me why I shouldn't leave the company. What makes this company so good that I wouldn't want to leave? And then ask, they hopefully could answer that question back. Ask them, why do they like working there? How come or ask them, how long have you worked here for? And ask them a whole bunch of different questions. And obviously, I don't know the person, and sometimes you have to be pretty aggressive. I was kind of asking questions during one of the interviews. I've been through a whole bunch of interviews. And to be honest, the person who was interviewing me did not convince me that I would want to work at that potential company. I mean, I was just sitting there like, I don't want to work for your company, dude. Like, you've already missed the sale here. And he's asking me all these questions. I'm like, I don't know, man. You need to sell me on this position. I'm here and I'm sitting in a pretty good position in terms of money made, in terms of I already have a job. You got to sell me to get me. And I came in there hot, and it's like, dude, you guys, you're not selling me on this position at all. It sounds boring as hell. So when you get older and you get a little bit more experience and you go to these job interviews, you could be aggressive as all hell. You could come into the interview and just start running the interview right off the bat. And if they don't like it, it doesn't matter. Maybe it's not a good fit for you. So when I come into an interview, and I know I don't have much else to talk about. That's why I'm talking about this stuff. Come into the interview and ask the interviewer, ask them, what exactly are you looking for in this position? What job skills, what kind of fit, what kind of soft skills are you guys looking for? Tell me exactly what you're looking for. And they'll say, well, we provided a job description. Tell them most of the job descriptions that I know of are they're just cut and paste. As a manager, what exactly are you looking for? And obviously, you should have already read the job posting. And if they're not descriptive on exactly what they want, get it from them. Think of it as like you're selling a product to somebody, and that product is you. So you need to know exactly what the customer wants to know and what they want and are looking for, because you can't read their mind. A lot of these managers have all these little idiosyncrasies, like they value certain skills or certain traits more than other skills and traits. Definitely some are more or less based even off the resume or off the job posting and your resume. So ask them, what exactly are you looking for? And I can tell you if I'm a good fit or not. And then I'll come back and I'll fire a whole bunch of different questions back to them. I will ask them all sorts of things. Why do you like working at this company? What is the culture like working here? What does my day-to-day job activities look like? How do you evaluate the people that work under you? How would I be evaluated in this position? 6 months out, what are your expectations for me and where I should be in the company? In terms of, like, maybe not the company, but in the job that I took. Some people have unreasonable expectations. If I feel like they've got a big problem on their hands and they're squeezed for resources, and they're going to throw me into this like whirlwind of a situation, I have to figure out if I want to go in there or not. And then I may charge more money. I may ask for a higher salary if I know what I'm getting into. A lot of people will ask a ton of different questions like, where do you see yourself in 5 years? I couldn't even tell you that. Every 5 years that I was working, nothing went to my plan. It was always, I always had a different boss. It was usually a slower progress than most people would think. When you're younger, it's usually slower than what most people think. And nothing really played out the way that I thought it would play out. So I'm not really going after a job title. I was not going after a particular position or title or anything, or even money. I just wanted a good fit. That's kind of what I wanted. But most of my managers never asked me what I really wanted. I would tell them, a little bit here and there, but most of them, yeah, they didn't really care. And I think I probably had a lot of really bad bosses. But make sure whatever you're looking for, you better ask, and you better run into that or go into that situation where you're kind of running you need to get everything that you need out of that job interview. So, but that's it. There's not much in terms that people are sharing sharing here. And if you guys want me to talk more about this stuff and careers and stuff, obviously I can talk more about that. Maybe not on the financial channel, but we can go into, maybe I open up another channel. We can talk about careers, but there's a lot of things that I probably would have done differently if I had known what I was doing right off the bat. But that's where I'm going to end it, guys. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Use that special coupon code, and we'll catch you next time. This is Finding Value.